Hello, everyone. How's it going today? Another Friday heading into the weekend. We've got Vinny here from Investment Club. How's it going, Vin?
Pretty good. How are you?
I'm doing wonderful. I mean, look at this week that we've had. My goodness, we've
Busy
got
week.
yeah, but CPI coming out hotter than expected, PPI coming out hotter than expected, yet the market's green. So, I mean, I'm cautiously excited. Really, truly
Yep.
am. Like, how much of this was actually priced into the market? How much was not? I mean, kind of my gut feeling right now, at least for the very near term, is telling me that we're expecting probably a rug pull coming. That's just my thoughts on this. We've been running up a little bit, not a lot, but we've been definitely pushing some higher levels. We've been seeing, especially with Tesla, trending higher and higher with higher lows along the way. But it's like we have coming up what is anticipated to be an earnings recession starting. We are looking at GDP numbers coming in, which could potentially signal that, yes, we are definitely in a recession. We've got the FOMC meeting coming up that is going to potentially give us a 100 basis point interest rate hike, yet the market's going green. So, have we truly priced in worst case scenario and we're just getting it and now kind of going green on the news, or what?
Yeah, every one of these little rallies we get definitely feels like a bear market rally, a little dead cat bounce. But, yeah, all these reports we got this week, 9.1%. Inflation and the market being green just goes to show you, this is why I don't take too many short-term bets because it's just unpredictable. It's craziness out there. But I was just making a video. I was reading some interesting articles that I tweeted too that gave me some interesting insights that actually, were a little reassuring, I think, heading into these Q2 results here, because basically three companies I was reading in the paper today. The first one, obviously we got JP Morgan's results, and the results were fine. The outlook is still cloudy, but as of right now, everything's fine. Credit card spending was up 21% year over year. People are still spending. They're still flush with cash. And then, Amazon just had their Prime Day. It was a record Prime Day. They sold 300 million items, biggest Prime Day ever. I think revenue was 11.9 billion, up from 11 billion last year. And it makes you wonder, how bad are things really? And with JP Morgan, obviously, there was a shift toward dining and travel spending. Obviously, people have been on house arrest for 2 years, so they're a little antsy to get out. And then the third one, though, that I thought was most interesting was Taiwan Semiconductor, which 64% of their sales come from the U.S., and they actually just increased their forecast. So they don't see the demand for chips going away. And a couple of their biggest customers are none other than, NVIDIA buys from them, Apple. So it got me thinking now. They said smartphone sales were up 3%. A little sneak peek maybe at what we have in store with these other big tech earnings coming up. Maybe is it really going to be the bloodbath people think? Is it just going to be, will this be the last good quarter and then we are really going to be in trouble, or is it all just overblown and not really as bad as a lot of people are saying?
Yeah, and I made a video yesterday and we were talking about, when it comes to the chips and all the supplies, and it sounds like there are some suppliers out there who are like, you know what, we have filled all of our orders. We had all this, labor that was here. We brought in all these people, we got all of it done. And now, like, not that demand is waning, but they're so far ahead of pace that they can kind of back down a little bit. But now you're saying that Taiwan Semiconductor is on the other side of these things. Maybe they just happen to have customers. Obviously NVIDIA and Apple are monsters to have as customers. So having those, maybe they have a project going on in the future. We know that EVs are going to be coming up. And obviously, even with the ICE market, it has been beaten down for the last 2 years. So they're going to want to pick that back up over the next year or so themselves. So it's like, maybe this Q2 is just that hiccup in the road. We know that we are going to see it for Tesla because of Shanghai being shut down for a month, Berlin and Austin ramping slower than expected, and then the Bitcoin impairment. So we know it's going to be a hiccup. Maybe it's just going to be a hiccup for all companies right now. Maybe we do and I know I was just watching Meet Kevin talking about a growth recession. Maybe that's all we're going to get. Maybe we're going to see, a paper recession. We're going to get GDP numbers that come out, show us that, yes, we're in a recession, but then all of a sudden we start to hit that bottom and really just kind of find our footing and start coming out of it for Q3 and Q4.
Yeah, that's a great point. I could see, a lot of these stocks, obviously, a lot of the growth, hyper growth plays and the tech plays, you could argue got a little overheated and, had these crazy valuations. And, that would make sense. I think this quarter will really give us a good idea. Because how long can we keep saying, recession, and I mean, with the GDP will contract, but, as far as the stock market crashing more, how much further can it go if we do keep getting reports that really aren't that bad, like we just had from JP Morgan? And it would make sense that, maybe this was a drought and a major crash for, those overvalued companies that were overvalued to begin with. But, for the broad market to really keep going, I mean, it's got to get a lot worse. And we're really not seeing that yet. Now, a few months from now, that could be a different story. Obviously, if inflation doesn't come down and these rate hikes increase. And I mean, I guess, a couple of the Fed people I was reading are still in favor of the 0.75% rate hike at the end of the month. That should be another pivotal moment. If they do surprise us with like higher than 0.75, I could see more pain. But at this point, I think the 0.75 is definitely priced in. And I don't know how much further, fundamentally strong companies can drop. I mean, it gets a little wacky at a certain point, until something really catastrophic starts to happen.
Yeah. And, looking at, and we were discussing it the other night too, is when you're looking at the SPY and just the fact that right now, this whole entire year, we've seen massive PE compression. If you look at some of those high growth plays that aren't profitable yet, you look at their 2-year chart and it looks like a massive momentum swing chart. It truly is. So looking at where we're at right now, maybe many of them have already hit their bottoms and they're just going to be sitting there. So usually, the top dogs, the Teslas, Apples, Microsofts, those are the last ones to fall. And they all seem to be climbing up slightly. But to Kairob's point here, we could be looking for a little bit more of a pullback. Now, if we're looking at a PE compression scenario going on, and we're going to go into a Q2 where we are going to be seeing a lot lower earnings coming in, if you've got algorithms out there that are saying, all right, Tesla should be at a 60 PE based upon what we have in our calculations right now, but Tesla's now pushing, that 110, 120 PE, then all of a sudden they come in with an EPS that's significantly lower than Q1. Naturally, those algorithms are going to bring down the stock price strictly based off of those metrics. So if that's the case, and it goes across the board that way for a lot of these big tech companies, we may see that pull back to 3,400 strictly because people are coming down with their earnings.
Yeah. And, SPY to 350, that would be what, another 10% drop? I mean, I could see that. But again, like a major drop, I feel like the worst, I don't want to be like a Jim Cramer here. Like as far as these stocks getting decimated, it has to be behind us, right?
I mean, I would think, but again, just the way we've been feeling lately, it kind of feels like we've got like one last punch to go.
Yeah.
And I don't want to be the bearer of bad news. I love thinking positively and having a silver lining, but realistically, looking at where we're going right now, what everybody's talking about in the chatter is bringing the S&P down to 3,400. And my thoughts on that truly are, retail has not capitulated fully yet. We have some of it starting, but I think when it comes down to it, it's kind of like retail doesn't want to, because retail is sick and tired of being manipulated. So retail right now feels like if they dump their stocks, they're just giving big money that opportunity to then buy up all those stocks on a low price after retail just bought, and retail is not going to be able to jump back in until the stock is higher than where they sold it for, and then they're screwed. So a lot of them are just doing the DCA and HODL method because for long-term investing, that is the safest way to go. And a lot of retail investors aren't trying to time the market.
Yeah, I think that's a great point. Like, this is the first time, compared to like the broad history of the stock market here, that people really have the resources and the wherewithal. And despite, the collective IQ of the population probably continuing to drop thanks to TikTok and all the other dopamine casinos, when you have things like Reddit and the internet, and it's just so easy to get all this info, I think people are smartening up, like you said, whereas in the past, that's exactly it. The market makers just try and get everyone in a panic, get things as low as they can, and then they throw all their cash back in, where now, yeah, you probably aren't seeing quite as much capitulation. Obviously people who were completely in, speculative stocks that have been completely wiped out or were over leveraged. But, the investors that have a little experience, that are willing to do some due diligence and just hold for the long term, they're not going to sell out. And yeah, so that'll be interesting to see how that plays out, because with the onset of the Reddits and all these things, like you have this community that probably has never existed before, and just access to information that people are probably smartening up a little bit, and they know what's happening.
Oh yeah, because now the retail masses actually have a way to communicate with each other, whereas big money before, to manipulate things, you'd have like 7 dudes go have dinner together, decide, hey, what are we going to manipulate this week? And then they come out and do it. And of course it's illegal, but whatever, they're talking over some drinks, they pay some people some money to keep quiet, and they do their thing. Retail never had that opportunity, and now we do, thanks to social media. So say what you want about social media, positive or negative, you use it for however you want, and it seems to be working in our positives now.
Yeah, that's true. Everything is a great tool if you use it correctly and in moderation. I mean, that's what's crazy, is like Twitter's what I'm on most these days. I deleted like Snapchat, Instagram, and all that crap. But Twitter, I mean, I found a lot of useful. This is how I found you. Like, it's been great for networking with like so many like-minded people, and lots of great info. I think on there, it does get you get caught up in the doom scrolling sometimes, but you got to just snap out of it. And as far as retail banding together, ape strong.
Yes. Yeah. And for those of you who are out there who are on social media, I mean, I'm on all of them. Like, my parents are on Facebook, so I'm still on there because of that. But it's like, one thing that I've learned about social media is it can be good or bad. And you can dictate how you want it to be. And that's what it comes down to. So if you don't like what you're seeing, then don't see it. And the algorithms and the way they work are, if you like things, it's going to show you more of what you've liked. So just don't do it. And so I've taught myself over time to be able to scroll through, especially because like I'm on Twitter, I'm like, all right, let me see the information that's actually true, pertinent. What is actually going to benefit me? What kind of value am I getting out of it? And that's how I take social media now. But I was definitely like sucked into it horribly earlier on.
Oh yeah, I think everyone inevitably, when it's new, it's like the shiny object, and then after a few years or however long, like you kind of wake up and you're like, all right, maybe I don't want to sit here and scroll all day and read all this rage provoking crap.
Harmsy, yes. So that's my thoughts too, and I've been talking about this a lot. And Tesla right now, in a bull market, Tesla has the ability to run away. No doubt about it. They can run. We saw that happen over the last 2 years. So, you can say maybe they ran higher than they should have, but that's fine. No big deal. In the long run, it's going to be going up on an upward trend, in my opinion. But right now, due to the macro being so heavy, it's like having a lead blanket on you. So there's only so much you can get up and move. It's eventually going to just weigh you down more. And that's where Tesla's at. That's where all stocks are at right now. They're just being definitely controlled by the macro environment. And same as you, I'm going to love all these moments that we're going to have, because I still have faith that we are going to be pulling out of this. Bear markets only last so long. Even if this lasts 2 to 3 years in the bear market, we will come out of it. And I have a strong feeling that Tesla is going to be one of the major runners coming out of it. And so that's why the longer I have to be able to invest into it, the better.
I will say, wasn't not too great timing. What'd you think of Andre Karpathy's departure?
I'm so mixed on that. Obviously we don't want to see him go. He was a vital part of Tesla getting FSD and autopilot and AI to where they are right now. But just knowing my friend who works for Apple and how quickly you can burn out there, and he has told me himself that Tesla is like 5 times more intense than Apple. So if that's the case, there's definitely a lot of burnout. I mean, we've seen it with a lot of people over there, especially any engineers, higher up people, especially if you're in the limelight like he was.
He was there 5 years, I think, too, right?
Yeah, he was there 5 years. So it's tough, and as he said, and Elon has said it himself in the past, he's just one engineer of hundreds of a team. And Elon has said himself that way too many people are giving Elon and Andre more credit than they deserve, because it's really the team that is doing all of the work.
Right.
And so, like,
Yeah.
looking, and obviously, a lot of people question, hey, if Elon wasn't here as CEO, what would happen to the company? And quite honestly, like, he is more and he said it himself, he's more of like a purveyor of the product versus an actual there. He's there to do some of the paperwork and all that stuff, which he doesn't like to do anyway. He just wants to sell the product. He wants to go
And
out there
stir the
and really,
pot on Twitter.
yeah, he just wants to drive the company forward. And that's kind of what Andre was. Andre was the guy who was driving AI forward. But,
Right.
Holmars had mentioned it himself. Back in February of 2021, Andre was already talking about potentially leaving the company. And so if that was the case, no good company out there doesn't have a backup plan. Like, it's just terrible leadership if you don't have a backup plan. Because, like, that's how I'm a manager myself. And the way I've always managed was I need to put systems in place. So if I died tonight, they'd be able to keep on running without me. And I have no doubt that's exactly how they have the systems built over at Tesla. And sure, they may falter a little bit. There may be some things, but don't forget that Andre was on a sabbatical for 4 months. So they've been operating without him for 4 months. And in that process, Ashok, I'm sure, stepped up and took over some roles that, he didn't normally have before.
Right.
And they were able to do this. So when Andre came back, he was able to have that conversation with Elon and say, you know what, I am feeling burned out. I have taken this time and I've thought about it and decided I love the company. I want to be, part of AI, but I want to do it elsewhere because it's too much for me here. And that's why, I think it's going to end up being like a JB Strobel type situation where whatever Andre does in the future is going to be something that, Elon and Tesla can partner with and push them forward. He wants to do something with AI and education. I think that might actually play into, if Elon announces he opens up a college, that might play into it.
Yeah, I think I don't think you can really read too much into it as far as a negative. I've been seeing all the Tesla Q comes out of their basements and they're like, "Ooh, the Tesla bulls are gonna spin this in some positive light." But I think it's like you said, and we already saw JB Straubel's departure is actually the perfect example. Left, I think, 2018 amid this huge ramp, and the stock ran 1,500% post his departure. Very soon, very shortly after. And I think it's true, like you said. I think at this point, Elon, Karpathy, these guys are like the Werner von Braun's of like, they're just great at putting the people together. They're like Nick Fury, they put the Avengers together, but the superheroes have been assembled. And as long as Tesla remains that top destination that we know Tesla and SpaceX are for engineering graduates, and how, even the two companies just are so interchangeable, people doing work for both of them in a lot of cases. As long as that's the case, you're right. Like, the person at the top, it can only do so much. There's only so much the coach can do.
Yeah.
We don't have the superstars, but at this point, Tesla has all the superstars. So yeah, I think that they'll be fine. Obviously it's a big loss, but these companies have huge churn. There's a lot of burnout, and it's to be expected. And he had a great run there, and a lot of other stuff I've kind of been seeing along the lines of, he obviously has other interests that he wants to get into with, AI and just academia. And, at this point, like they don't think he would leave. Like, they think he got it to a point where it can succeed. And, he did his part. And it's not that he is not confident in full self-driving, but it could also be that, he did his part and he thinks they're in a good place to get to where they need to be. And like, his work is finished. So, definitely a loss, but I think that it doesn't really change anything long-term here.
Yeah. Hi, Ariana. Hey, Logan, what's going on, man? Yeah, and actually, and this is a great point here. And, I think about it myself, where sometimes you have somebody, and we talked about it with my son on his soccer team, and there's a kid who's really, really good on the soccer team. And, he ended up getting taken out for a couple of games. And the team, actually, a lot of other people ended up stepping up and became better players because he wasn't there. So it's almost like they were leaning on him like a crutch. And not to say that Andre was like that. I don't know enough of the inner workings of the engineers going on over there for FSD, but that might be the case. And we might see AI Day 2 come out, and a lot of new talent stepping up. You may have Andre depart, but you may have 5 or 6 people really kind of rise to the top and become even better. And maybe Andre himself, because he was burning out, he just didn't have the same mojo, the same flow going for him. So he wasn't pushing, the company and AI forward like he was before. And maybe now we'll get some new, fresh, blood in there to really drive it forward even faster. So, maybe this was a good thing. Maybe we were at a point where Andre was kind of, not the driving force that they needed anymore. And maybe it was actually holding them back, if anything.
Yeah, that would definitely make
it, but it could be.
That would make sense. And I'm sure, he brought certain strengths to the table, which he probably did everything. He did his part again, and yeah, now kind of opening the room for new people who are going to make the new changes and, breakthroughs that are needed. Yeah, maybe he's kind of, obviously he clearly was probably burnt out and kind of over it. So yeah, if anything, then this is probably a positive because it's going to, let new stars come through and shine.
Yeah. And I mean, and again, going back to AI Day 2, this is obviously the place where they want to recruit new engineers, and now they can see, all right, hey, there's openings and room for growth over there. Let me get in here and really jump on board.
Yeah, AI Day 2 is going to be really interesting. And I saw some comments, in the short term, yeah, it's all macro is going to hold the stock down. I think this Twitter circus, unfortunately, I thought that would be the end of it, but I think we're only in the beginning until this whole trial and all this crap is done. It's just a negative overhang that is also, going to kind of keep the stock suppressed. But you know what? Buying opportunities.
Yeah. Oh, absolutely. And it's funny because, Elon was obviously like, hey, let's rush to buy this. And now Twitter's like, hey, let's rush to get through court. And Elon's like, no, we're not going to rush.
This is going to go down as like the most bizarre, forced like takeover of all time. I think you can't make this stuff up.
Like at this point, I'm just going to sit, and I've seen plenty of memes on Twitter about it. I'm just sitting on the sidelines with my popcorn and watching this. Because like Gary Black thinks that this is actually going to be over by October, but now with Elon wanting to push this off until next year, who knows what's going to happen? I like the way Holmars put it though, which was for everybody who's thinking about how much drama this is causing and it's such a bad thing for the stock, where we are right now at this point, worst case scenario is Elon has to buy Twitter, which is what we were already expecting to begin with. So any other scenario that comes out of this is even better than expected. Yeah. And I know a lot of people are wondering, well, is Elon going to have to sell more shares? From what I know, and I don't have this factual information, but from what I know, the backers that Elon had were enough to cover the rest of the purchase. So he was not going to have to sell any more shares. And I know a question from some of the backers on this was, hey, well, if the bots aren't, true to what Twitter says they are, then we don't want to back this deal. And I'm sure that's part of why Elon was going to back out of it himself. But but from what I've heard in the contracts for all of these backers, it is that if this deal goes through, they must pony up the money, which means that Elon will not have to sell any shares.
I think in the highly unlikely event that he is forced by the court to buy Twitter, which I don't think is going to happen because it would be ridiculous, especially after this whole debacle, how hard Twitter fought to not let it happen. And then all of a sudden, what happened that they just overnight just completely, totally shifted like, oh, yeah, let's get this deal done. Let's get this deal done. It makes no sense. And it kind of plays into Elon's court of like, maybe they are hiding stuff, but also, as far as the backers, I don't think he would have any problem, bots or not, getting outside funding. Anyone is going to want to be a part of anything Elon Musk touches. They know he's going to, oh no, Elon's going to buy Twitter and make it awesome and maybe actually start growing, But the other thing I think we have to think about is Elon clearly doesn't want to do it anymore. And this board has a vested interest to do what's, in the shareholders' best interest here. And if Elon does not want to own the company, why would they force him then to buy the company? Because, this is not going to be in the shareholders' best interest. So, it would make no sense. They would be, disregarding their fiduciary responsibility. And I just don't see it happening.
Yeah. And my thoughts, and, to kind of, play the devil's advocate here, Elon now wants to push this off until next year. But we know full well when they go to court, the first question is going to be, Twitter, show us the true data that you have for the bots. Because if this comes in and it is that you definitely lied about the percentage of bots out there, then you have falsified your material information, and this deal is null and void. However, with Elon wanting to push this off, my thoughts are, well, if they wanted to get a rush trial done, my guess is over the next, if we don't do it till 2023, that then gives Twitter time to gather information together to be able to say, hey, you know what? Yes, here's our data. We can, whatever we need to do to manipulate it to come out with the right numbers, versus now where Elon knows they do not have that information. So
yeah, that's a great point.
I mean, I don't know truly what's going on over there. And Elon seems to be a step ahead all along the way. But I mean, Elon's not perfect. Elon's a human too. So, he can be wrong. I just don't know.
I think Twitter is going to have a very hard time, with their case. Elon just seems like he has a stronger case. And even if, Twitter is more in the right, a court forcing someone to buy a company for $44 billion that they don't want to buy, I don't see it happening unless they try to make an example of him. But like you said, they probably are trying to hold out to 2023 when they can prove it all. But you know what? If that means we're past all the, this cycle here and all the messes going on in the world, and Tesla's back to mooning in 2023, that might alleviate the problem too. And Elon will be like, you know what the heck? Like, things are good again, and I have plenty of money. I have doubled my net worth, and he'll just buy it. And yeah, that might work out better, either way for both parties too.
Yeah, and actually, and Logan's a great point. Knowing the judge that's there, she basically forces it unless she finds something like immaterial information that is gone. Then he's going to be forced. And now I just had another thought that came into my head. Maybe Elon is pushing it off to next year because he hasn't sold, as far as we know yet, he has not sold any of his Twitter shares. So if this really was a bargaining chip that he was playing all along, that some people were anticipating, and he waits till next year, anticipating that the entire market's turning around, maybe Twitter shares end up going back up to $45, $46, $47, and him buying it, he might actually be able to buy it cheaper because it's a $44 billion deal, and he might not have to spend as much. Maybe that's what he's waiting for, is the entire market to turn around and the value of Twitter to go up. Now, at the same time, for the last 10 years, Twitter has moved completely sideways and has gone absolutely nowhere. So I don't know what 1 year difference is going to make, but
yeah, we'll terribly managed company with some incompetent people on the board there who don't even have Twitter accounts. It's truly, I'm telling you, this is going to be like a WeWork style Apple TV Plus documentary, mockumentary or something in 2 years.
Let's see what we got here. How much for Optimus bot demonstration? So I honestly don't know. I know it seems like Elon wants it. They pushed off. I'm actually curious myself. I'm wondering if they pushed off AI Day 2 a month because they knew Andre was leaving. I'm wondering if that's the case, or if maybe they were a little further behind on the Optimus prototype that they wanted to actually have it ready, so they pushed it off. Don't know this, but I'm guessing those two things probably played into it. But Elon does seem pretty confident about Optimus bot coming out and doing a demonstration. I don't know what it's going to do. Maybe it's just going to be picking up boxes and moving it around. Even if it came in and was able to say, hey, Elon's holding something, it's going to take it out of his hands and go move it somewhere else and hand it to someone else. That's actually a huge step. And if they can manage to have just that happen, that's significant.
Anything that is a step above a man dressed up in a spandex mannequin suit dancing is going to blow people's minds. And Harmsy, as far as Wall Street, moving the needle with them, I don't think you're going to get anywhere with them until it's producing the revenue. But I think for the Tesla community, it's going to be incredible. I mean, because we already have, Boston Dynamics. There's so many companies already doing so much with robots. So it's not like they're the first one, but when we start seeing the use case and they're using it in the factories and the costs are coming down, I think that's when, you'll start to see the enthusiasm for Wall Street at least shift. I mean, Tesla people, we're going to eat it up. Yeah, if that robot can pick something up and just walk around, I mean, it's going to be absolutely incredible in such a short amount of time, how far it's progressing. Just think what another year will do.
Oh, yeah. And so when it comes to Wall Street, too, you got to remember, especially when it comes to Tesla, because it's so heavily invested in by retail, that euphoric runs are mostly retail and market manipulators just driving the stock up, taking advantage of that euphoria. Institutions are going to hold their levels because they literally have percentages that they need to go by, and that's it. So they've got their things set and they go by that. So that's why as we get into another split and as Tesla gets credit rating of investor grade, you're going to have more institutions going in there, and that'll steady it, the stock out. And so right now they have a beta of 2.0. My guess is it's going to come down significantly once they get investor grade rating and we get a lot more institutions. Because for a stock with the valuation that Tesla has, I've never run the numbers, I've never looked, but I would venture to guess that they have more retail investors for Tesla for their valuation than anybody else who has ever hit this valuation before. Because usually it's institutions. You look at the Microsoft, Apples, those $2 and $3 trillion companies. Those are very low beta, not going to move much stocks.
Yeah, it looks like I just looked it up. Institutional ownership is around 42%. So yeah, considering how big it is, I mean, it's got to be the first company of its kind that has such a heavy retail presence and just such a community built around it. I think the two biggest companies like this is Tesla and increasingly Palantir, but Tesla really leads the way with just these people Tesla might as well be paying them for debunking all the FUD, us too. I mean, we could be the PR department, but there's no other stock quite like it that is such a retail following, that is so quick to break the news and explain what's actually happening and just debunk all these nonsense, arguments against it.
Oh, I know. And honestly, that's why a lot of people do swing trade. That's why their beta is a 2. Because they know that you're going to get a euphoric run, which is way higher than it should go, at least at the time, in my opinion. So it runs up that high, then people are going to sell off and bring it down. And then you've got the people who are shorting it intentionally because they want to catch that downswing. So it brings it down further than it should go. That's why Tesla swings the way it does. But again, as a long-term investor, those swings are going to happen, but they're going to happen on their way up. So in the long term, you may still get swings up and down, but you're still going to be net gain.
The trend is up. Yeah. What do you think? So we got Q2 earnings Wednesday. What do you think? Do you think it's priced in, or is this going to smack the stock in the face?
My thoughts going into production and deliveries, we obviously knew that was priced in. It's pretty easy to at least get a rough ballpark of where they're going to land for production and deliveries. So when that number came out and they fell basically in line with expectations, it didn't move as expected because that's basically where they were. So that got priced in. So when you're looking at the EPS of that number was also priced in. The unknowns right now, we know that they've got the basically $500 million Bitcoin impairment. That was priced in, but we don't know what average selling price on the vehicles are. We don't know how much the ramp costs of Berlin and Austin were. And, Elon said they've been burning billions of dollars, but was that for the quarter? Was that for the whole last year? When did that money actually fall in?
I would venture to think that, a lot of that is priced in. And what's probably going to happen, the way this stock trades around earnings, if they do have a surprise beat and it's better than expected, stock will tank. And if it's worse than expected, it'll go up, knowing how this stock trades. God. But, what I could see is, obviously vehicles are down. So overall revenue is going to be down. And I'm sure profit margins are going to take a pretty sizable hit too, because even though they've increased prices, that's on the later models. So I'm sure, maybe not all that has actually taken into effect yet. So I could see profit margins coming down. Revenue is obviously going to come down. They delivered less vehicles. And maybe, not all those price increases will show yet, not until, maybe Q3 or Q4. So I could definitely see, both those numbers in EPS taking a hit here.
Yeah, and I think the problem is very similar to what we saw when it came to the production and delivery estimates. They had two different ones. You had one around the 255, 256,000 mark, which was anybody who did actually update their models. And then other people who didn't, and you factor those in, they were around 267. So could that be the same thing? Because right now we have an EPS estimate of around $1.80 or so. I've got them at 173 because people who didn't update their production and delivery numbers could be, magnifying that higher. So if that is the case, and Wall Street's looking at the estimates and not taking into account the people who didn't update their numbers, and I'm estimating 173, if that ends up being the case, we might end up pulling back. However, my thoughts on it are the market looks 6 months into the future. So you're going to get one of two reactions. which is what is guidance? If they're still guiding for 50% year over year growth and they're guiding for a stronger Q3 and Q4, then we're going to see probably a good thing in the stock price. But you also have the people who are anticipating a lower than expected number, and maybe they're intentionally boosting the stock up now to pull the rug out from us on earnings day because they know that we are going to get better numbers in Q3 and Q4, and they want to buy in lower. So they may intentionally draw the price down just to buy in lower. Just the two ends of the spectrum that I can see, and I'm ready for both. If we end up going green, I'm going to be super excited. And if we pull back, I've got cash sitting on the sidelines to go and dump in on it.
Yeah, definitely agree. I'm reading some of the comments here.
Yeah, actually, I was looking at this one because so Q3. So I've got that's for me, angry bald man, happy bald man here talking. So I've got that for me is my ideal goal. If we can hit 900,000, I would love for Tesla in the second half to be able to hit the same number of deliveries that it did all of last year. 936,000. If they can hit that in the second half of this year, absolutely amazing. Whether they can or not, I don't know. I think judging by how quickly they are exponentially ramping right now, and Elon has said it, they might pull it off. And so Kairov, who is here in the comments, who is if you guys don't follow him on Twitter at aTeslaBot. So coming out with his numbers here, I've got them posted. So he's got Q3 production. And now, so you guys know, anybody who's on Twitter, Troy Teslike is over there. Many people follow him. He comes within 1% of the numbers. And aTeslaBot has also come within 1% of the numbers. So awesome job. And he's predicting right now production numbers for Q3, 371,686 and deliveries of 372,446. And he updates it regularly. It's twice a week. He said when he goes back to school, it's going to be once a week. But we'll constantly get updates from him. I put him on my channel regularly. And you guys follow him on Twitter, definitely. We also have a Discord chat, and he puts them over there as well if you guys want to follow us there. So I have a feeling they're going to get close. Right now, I have them at 380,000 for Q3. So I'm hoping to be pleasantly surprised.
Yeah, I mean, June alone was what, 100,000?
Yeah, and I know that we're down. We have a little downtime here in July. And I know that, but coming out of that, we're going to basically make up whatever downtime we had within a month. Once we come back online, going from 17,000 a week to 22,000 a week in Shanghai, they're going to make up for that downtime very quickly. We've got Berlin, who's going to be down until I think they reopen up on the 25th, and they still don't even have a third shift. They still aren't working weekends yet. From what I gather, it sounds like Austin is working 6 days a week, so they're not doing 7. I don't know if they're doing 2 or 3 shifts, but they're pumping out about 1,000 vehicles a week right now. So we have some ramps significantly jumping. So we may have a very good surprise Q3. So that's why I'm looking at these Q2 numbers. If we get that dip, big buy time.
Yeah, I think they could still hit the 50% growth rate, get pretty close to 1.5 million, if not past that, barring, any more lockdowns in Shanghai. I mean, yes. You got to think too, Germany and Texas, eventually they're going to ramp. And, when Tesla said, a few quarters ago that Shanghai and Fremont alone could get them to 1.5 million this year, I think that they're going to get there.
Oh yeah, and I mean, I'm looking at they technically need 1.4 million to hit the 50%, and that means that they need 839,000 for the second half to get there. Does not seem like it's going to be a problem. We shall see, but I'm looking at and then going to Q2. Yes, so average selling price, I've got them at 53,500 for average selling price. I think I'm going to be low. I think they're probably going to come in maybe at 55. That might be a surprise. Because I did the percentages, and for Q1, they had, I think it was 4.5% of the vehicles were the Model S and X. And because they had the downtime in Shanghai, it ended up being 6.5% of their vehicles were S and X in Q2. So, I know it's only 2%, but 2% could be enough to swing. I mean, they're basically double, if not triple the price of what the Y and the 3 are. So that could swing it significantly in one way or the other. And then all the price hikes that they had for the last half of Q2 or last half of 2021 are starting to hit in Q2. So those are significant price jumps as well.
Harmsy had a good comment here about, worrying about if you're lock yourself in an echo chamber. I wonder the same thing, but I'm constantly every day trying to seek out realistic bear arguments. Like, what am I missing here? And you know what? I can't find any, because what is Tesla's competition? GM, who is now going to sell a $300,000 Cadillac. Disgusting. Like, there is no competition. The closest and only competition is Volkswagen. And so Volkswagen and Tesla together can dominate this whole market, and Tesla's going to have all these other things going that Volkswagen's not. With the energy, we could get to that later. I was reading some interesting stuff about those virtual power plants. The TSLABot, the full self-driving, VW, their best hope is to compete with the EVs, but they're out of their league. They're not competing in the other things. GM's going to sell what, 200 more electric vehicles this quarter? I mean, there is no competition.
Yeah, and for me, and I do the same thing as Vin. For me, I will go out there and I have like, all right, I have my theories and I have my set. I was like, all right, this is where I think Tesla is going to go. Let me find something out there to debunk what I have. And I'll dive in and make sure I'm finding the facts, because there's a lot of FUD and a lot of noise out there, and just pure haters just spewing lies. So I try to do my due diligence to find all of the factual information out there to debunk what I think is going to happen in the future. If I'm going to be investing, and right now my goal is to get to 69% of my portfolio to be Tesla, if I'm going to be investing that much of my money into one company, I want to make sure that that company is going to be true to what it is. And I don't want to have myself just floating on a euphoric cloud nine high, because that's not wise to do with your money. So I'm really certainly going out there trying to find every negative thing. And quite honestly, when it comes to competition, I think for the next 5 years, all of it is good. All of the competition for the next 5 years is good, because we've already seen that EV adoption is growing significantly faster than anticipated. That is what is going to transition the world over to renewable energy. I'm hearing commercials from Eversource, who is the electricity provider in my area, talking about getting credits and rebates, knowing that people are switching over to EVs and wanting to have power stations, talking about, if you have a company or a business, putting, stations outside, charging stations outside of your place of business, or for your tenants if you rent out places, because you can get credits for that. The world is starting to transition to this. We're starting to see a lot of these Easter eggs popping up, and a lot of these little, just signs saying, hey, we are going in this direction. And so because we're already going in that direction, you got to take a step back and remember, what is Tesla's mission statement? They didn't come out and say that they wanted to transition the world to EVs. They wanted to transition the world to renewable, sustainable energy. And in this process, the faster this competition can get the world transitioned to EVs, the more need there is going to be for sustainable, renewable energy. Hey, guess who has a solution for that? Tesla. And Tesla is now going to come out. And that is where the energy S-curve is really going to start to take off. So when we get the competition coming in and people are like, oh, well, what about competition? They're starting to take away EV market share. Well, that's great. We already know that's going to happen. Tesla has already said, Elon said, they're not looking to have it all. They're going to have maybe 10, 15, 20% of that market. But what does the competition have as far as energy goes? Nothing. So Tesla will be competing with no one in the automotive industry when it comes to energy. And then you've got robotaxis, AI, and that's down the road. But just the whole transition to getting the world to renewable energy is going to be helped by competition.
Yeah, and I think the whole, obviously the solar industry is brutal. It's still really hard. Like, the best companies probably Enphase, but Tesla has the advantage where they can package all these goods and possibly even get into things like HVAC eventually. But, it's like Apple. Like, you get in their ecosystem with the iPhone, then you're buying AirPods, then you're buying, the Apple Watch. I'm on my Mac right now, and I could see a similar effect. And going back to what you said, their mission statement and the big idea, I think we need a price to big idea ratio. And, not to get too woo-woo here, but like, you got to think about, I was thinking about this the other day, the empowering effect. Two companies come to mind. When you have a great mission statement like Tesla, transition the world to sustainable energy, fast track that process. The other one that comes to mind is Amazon, how it's all customer centered, making the customer's life better, easier, giving them more value. it almost, especially in Tesla's case, it makes every employee a stakeholder, and just giving them the power to maintain the company mission. This is not only, you want to talk about other advantages they have over the other auto companies. The other auto companies don't have this overarching like sustainability, save the planet-esque mission, and I think that this can really help change behaviors and attitudes. And obviously that will translate into the bottom line where, like we said earlier, Tesla, a very high stressful place to work, probably with some burnout, but people are going to power through that, where with another company with a weaker overarching mission, they probably wouldn't, right? They'd be out of there. They'd be like, this guy's nuts, the CEO. He's tweeting what? Like, I'm out of here. But, Tesla, I think that there's power to that. So I think that the mission statement is a huge, aspect to that. And who else, what other automaker really can compete with that?
Yeah. And, we were actually talking about that at the end of the day today at work. And, it's people need a purpose. And that's what it comes down to. And I guess there was somebody who did a study with some college kids, and they had them all go outside and dig a ditch. And then they had them fill that ditch back in and said, all right, so whoever shows up tomorrow will pay you double. And less people showed up the next day. And they continued this going on, and less people were showing up. And they're like, but we're paying you double every single day. And they're like, but what was the point? There was no point to it. There was no purpose behind what they were doing. And people want a purpose. You can even pay them less if they feel that what they are doing is going to make a difference. And so that's why we see a lot of that happening with Tesla and the people who work there. And then, going to competition, like the Neos and the Xpengs, my personal feeling is I believe Sandy Munro is going to be right with this. And Elon has said it himself. When it comes to the Chinese automotive makers, they are a lot further ahead than many people think. I think what ends up happening here in the US especially is we don't get the news as it truly is, because we are such an anti-China country right now that the media is going to portray China in a not a good manner. And so a lot of stuff that's going on over there and that is good is not being represented here in the US. So you've got to really dig deep. And that's another good thing that social media can give us, is information from around the world that the mainstream media will not. And I think that they have some very good things going on over in China. They do have some inner turmoil that's going on, which we know. That's fine. Financially, they're going through some tough times. But I think, think about, who owns, and I asked a question to somebody else a while back, who owns, all the debt that we have here in the US? Who owns it? Guess it's Russia, China, and the Saudis. I mean, why do you think we bend over for them all the time? Because they own us, basically. And if China owns our debt, they've got something going, despite the fact that they're having their own financial troubles. So,
yeah, as far as NEO, I own some NEO, but I've been looking at my portfolio the last couple of days, and I think I'm getting closer and closer to doing a lot of trimming. Mentioned earlier, so my Tesla position is 75% of my portfolio, and I'm not touching that, even though it has been a very volatile year and is a little stressful sometimes. I just keep telling myself, I think long term, I'm going to be, the way I see it is at this point, if I sell now, my cost basis is like 150. I'm losing automatically 50% to capital gains and just taxes. So at this point, I might as well ride this thing out and see where we can go, because I'm going to regret selling too early much more than I'm going to regret riding this thing, to the end. But, NEO is a company I've been looking at, and I'm like, do I really need to own this? So the two Chinese companies I have is NEO and Alibaba. And, it's like every day there's more, negative news coming out. NEO, I think, was at Hindenburg, just had a hit piece on them.
Yeah.
And at some point, especially now with Tesla down so much, I start to seriously consider, at what point am I better served just putting this money into Tesla or some other, investment. I think in the coming weeks, or, by the end of this year, I'm definitely going to cut down my portfolio just as far as the number of companies I own. I mean, I probably have like 30 positions, and I want to get it down because, you might as well flock to a handful of winners. And then I plan to hold a few index funds too on top of that. And yeah, I'm kind of over it. And I think, what can NEO do that Tesla is not doing better? And all the risks that come with investing in these Chinese companies that are just never ending. It's like, what industry is the Communist Party going to attack and destroy today? What company is going to get delisted? And a lot of this, I think, does go back to the market maker narratives, trying to get the prices down to buy low. But I can find any Chinese company, Alibaba, why not just buy Amazon? There's great American equivalents. I'll save on that foreign, tax and deal with a lot less drama. So
for me,
more and more, that's where I'm heading.
Yeah, for me, Neo is the only Chinese play that I have, and I'm doing the same as you. I'm whittling down on some of the ones, some of the stocks that I don't feel doing well in the long term. So just chipping away at some of those. I've actually been chipping away just to free up cash. Some of the higher end, I'm taking a loss on some things because I was getting close to, it's just something to offset capital gains taxes at the end of the year. So I'm doing that now. And actually what I'm doing is I was doing fractional buys on a few different stocks over on SoFi. And once I hit a full share, I decided I'm going to stop and take that money and start putting into Tesla. So I'll end up putting in, it'll be, I think, about $100 a week into Tesla once all is said and done. And that should be done by next week. Actually, probably right by earnings, I should be right at that point. And it's just same thing and just trim down on things. And then I've noticed I own QYLD. It gives me 11 to 12% returns for dividends. And that's been, when you're getting 12% every single month, or when you're getting 12%, for the year, and that's jumping on top of, all the losses, it's actually the only thing that's holding up relatively well for me in my portfolio. So my strategy right now is I'm getting myself to 10% cash, and then anything over 10% is going to get split half and half between Tesla and QYLD, and just ride that out until we start coming out, because, it's, for me right now, putting any money into anything else until we have hit a true bottom that we know of just isn't worth it.
Yeah, that's what I'm thinking about doing more and more too, is kind of getting some more dividend focused funds going. Because the majority of my portfolio, obviously Tesla, I got Apple, I have Meta, and it's Google, mainly technology companies. And I think the best way I can hedge that is over time, I want to build out 5% each. I would put into SCHD and 5% into VYM. I also have, the S&P 500 index is one of my biggest positions too. But I think those two dividend focused funds would be a great hedge and kind of balance it all out, get me exposure to all those industries that I'm lacking, like financials and energy, even though Tesla will take care of that eventually, oil for the time being, for when, tech has a hissy fit, and pay great dividends too, and get you, SCHD, I think the Schwab dividend equity ETF has actually outperformed the S&P, I believe, over the last decade.
Oh, nice.
So I think that those are two great ones that I have my eyes on, on my watch list that plan to start adding to. And that's probably what I'm going to end up doing. I'm going to shed all the excess companies. I'll put a little bit into those. I'll keep a significant amount in cash, and probably average the rest out into Tesla is how I'm looking at the rest of this year.
Yeah. This year is kind of a rebalance, resituate your portfolio type of year for me. Let me see. Berlin's, yes. Berlin's adding. Yeah, we know between September and October, they're adding that third shift. So that's going to boost them up. So that should, man, I mean, I think with their upgrades right now, they're looking to double. So that there, and I know Elon said that by the end of the year, they're looking to get to 5,000 to 10,000 vehicles per week coming out of Berlin. I think with all that, they're on pace and on target to actually make that happen. Let me see. Where's about the power grid going down in Austin?
That's a great question. So that I was going to mention this. So I was reading how Tesla Energy, currently in California, they have that partnership with PG&E. 1,500 Tesla Powerwall owners have already joined the new virtual power plant program, where I believe they're getting something like $2 per kilowatt hour that they're pumping back onto the grid. So they've got these virtual power plants already working. I know they're doing, they've got a lot of the mega packs and stuff in Australia too. It only makes sense that, yes, hopefully sooner rather than later, they go to Texas, where there's clearly a big need for that with, obviously they have all kinds of struggles, especially in the summer here or the winter. If we get another freak snowstorm, that it logically would make sense that they would bring it there next, and maybe get Austin fully sustainable and build it out from there, get some virtual power plants going. Another great revenue stream.
Oh yeah. And think about, the environment in Austin and that area in Texas is very similar to where they have it over in Australia. So they've already seen that happen there and is doing very well in Australia. I have no doubt that they're going to do it over in Austin as well. Let's see what we got here.
I think going back to earlier, I was checking what I had written down here. As far as competition is being great for the next 5 years, EVs only have 5% market penetration. So there's plenty of room for everyone to thrive. And that's where Tesla has put the focus on grabbing as much market share over launching the Cybertruck when they'd only be able to make, what Ford's doing, 40,000, and then they'd be out of materials. Obviously, the trucks are going to use more batteries. But going for the market share, there's probably 5-10 years, if not more, of EV market to be captured with the way the competition's rollouts have been going. And then when that day comes, Tesla has all these other avenues: the Cybertruck, the semi-truck. There's barely any truck competition. I mean, until Rivian and Ford and them really scale up, and Chevrolet. Don't hold your breath on that one, but like, the semi truck, nobody's making electric semi trucks, and
Nikola is. Come on.
Yeah, that can roll down a hill,
yes.
But actually powered semi trucks, and it's not a matter of if to me. I mean, it's clear that we've seen some prototypes rolling around. They can do it whenever they want. They're just, obviously, these are going to use a ton of batteries, and they're waiting until it makes sense to do it. And so these will fuel Tesla's growth for years and years to come if the EV market does get to 100% captured. And then again, I mean, you've got a 20-year cycle on the auto market. The other auto companies are going to be the ones that struggle first, because the EVs are probably going to last a lot longer, and they're not built to withstand that, whereas Tesla's only got the EVs.
Oh yeah, and I mean, and thinking about the brilliance of timing with Tesla. And this is great news. Thanks, Kyra, for sharing that they actually finished early with the Shanghai Model Y upgrades. So that is awesome. And thinking about the timing that Tesla had, and whether it was intentional or not, I don't know. But, we all talk about how legacy automotive is down so much in sales. Well, it doesn't mean that demand went away. The demand was still there. They just couldn't produce enough vehicles to take up that demand. So that's why production is so important. And the more vehicles Tesla can produce, the more they're going to sell, because the demand is there market wide. And so it really comes down to who can produce the most vehicles is going to win. And because Tesla is so far ahead and the world is transitioning over to EVs, that's just falling right into Tesla's lap to fill up. So if we've got production really exponentially ramping this year, which is what Elon's big focus was scaling up production, that means that's going to put them that much further ahead of everyone else. Now, my big question is going to be, yes, we've got the Rivians already out there. We've got the Ford F-150 Lightning that's out there. The Silverado is supposed to be coming out next spring. And the Cybertruck may be the fourth one that comes out. But what do you want to bet that the Cybertruck production ramp is actually going to surpass all of the other three within a year? I mean, that's just how Tesla works. And that will be the real telltale sign, because the other three automotive manufacturers will have trucks out before Tesla, but Tesla will get them to scale production before the other ones. And it'll be interesting. And we'll see that in 2024. That's my guess. Let's see.
Back to the Chinese stocks. Yeah, they're so cheap, but any day when they get delisted, then they're going to be real cheap. And another thing, going back to Alibaba and the Chinese stocks, I think how I'm going to end up playing Alibaba is, I bought a call expiring, I think June 2023. The calls are dirt cheap right now. I think I'm going to end up selling my Alibaba shares. I think my average costs 180. Use it as a tax loss this year. And if it goes up, I'll prosper from the call, but I don't need to leave all this money locked up in limbo, hostage to whatever the CCP wants to do over there. And then BYD, they're a formidable competitor. It's funny how these articles come out, they've surpassed Tesla when the majority of their sales are hybrids.
Yeah. And looking at BYD, and again, going back to competition, I think it's good. And Elon having a partnership and Tesla having a partnership with BYD to get batteries, I think is an awesome thing, because a lot of people are concerned about, Tesla being over in China. What's going to happen if China goes south? Well, Tesla has a great relationship with not only the other automotive manufacturers, but, the leadership that's over in China to begin with. China, they've got the deal where, Tesla's coming out with a lot of good knowledge. They're sharing that knowledge. That was part of their agreement. But China's using it because the better China can do to bring EVs into the market, the better it's going to be for the entire world, and in turn help Tesla again in the future. So I think it's a good thing, and I think BYD being a formidable competitor is good. Think about any other product that's out there. If you're the only one who's out there, you've got nobody really pushing you to get better. So even with Tesla being in the lead, it's good to have other competition pushing them because that forces them to stay better than everyone else and not get complacent. Yep, people in Australia getting reported assigned VINs. That's awesome. And I have no doubt we're going to see at least one, if not two, new factories get announced by the end of the year. Gary Black is thinking it's going to be Eastern US and UK. I'm thinking Indonesia with all the news that we have gotten. I would love to see one in Australia, but I think Indonesia with the nickel being right there in the battery factory coming up, that makes the most logical sense when it comes to logistics. So that right there, I think, is going to be the money place where they're going to end up.
They're already doing the battery factory there. It makes the most sense. I definitely think one will be there at least.
Yeah, and thinking about, we were talking about before, right-hand drive vehicles, they do that in Australia, Indonesia, Japan. There's a lot of countries over there that drive on the other side of the road. So having them have that factory right there to do just that, because right now Shanghai is pumping out both. So if they have one factory dedicated to that, that would make a lot of sense for efficiency purposes as well. Let's see. Yeah, VW is having problems with their software. But one thing that I've noticed about, VW is tough. I think if Herbert Diess didn't have to deal with the board, I think VW would be in a lot better shape to take over EVs than they are. Because Herbert understands, he gets it. He understands what's going on. He would love to be able to work with Elon. I have no doubt if he was in charge, Elon and VW, not to say that they would partner together, but there'd be a lot more, conversations being had to help the entire world move forward. And I think, the board over at VW is so locked up with, the old school oil companies and stuff that they're holding them back.
Definitely true. That's another thing Tesla's really shown, that this is like a new era where doing the most good will be rewarded with the highest market cap, whereas they're still stuck in the old way and they're owned by oil of like greed, and we're going to see some major changes happening, I think, over the next decade.
Oh, yeah. The Google split. That's right. I almost forgot. I thought about it like twice today because I purposely bought, and I didn't dump a lot of money into Google, but I wanted to have a few shares because I do think Google is going to do well in the future. And obviously Google's who pays me through YouTube. So thank you, Google, if you're listening. And so with that said, I've got myself to a point where I think I'm going to end up with 2 full shares when it ends up converting on Monday. But yeah, that was today. So today was the last day. So it converted. So Monday we will see our shares split. And, that might actually be a reason why the market was doing what it did this week, because, we saw it happen with Amazon when they split. They had a little run going into a week ahead of time. And now with Google, same thing is happening. And Google obviously being a massive company like they are, a lot of people buying in, pushing that up. That could have been enough to push all of the indices up going into Monday. So maybe timing from that, all running through my head right now. So great point. Maybe with the timing of that, we're going to get the post-split sell-off for Google right at the same time we're going to get Q2 earnings coming out, FOMC meeting, GDP data. That could be another trigger catalyst that brings us down for these great buying opportunities.
Totally Google's another great stock. I own some too. I think at this point, like if I had to pick 3 individual stocks to just hold and not set and forget for the next 10 years, I'm going Tesla, Amazon, Google. Can't go wrong.
No, absolutely not. Let me see.
Yeah, I heard he was rumored
with Warren Buffett doing. I heard about it, and I heard that the number of shares that were to be sold were almost identical to the number that he owned. I don't know. And I don't know with him if we have to go through a Form 4 filing to check for that, or if his fall, because it was bought through Berkshire Hathaway, if we have to wait till their quarterly statement to find out. That one I'm not sure about. So I don't know when we will find out for sure on that. But we will find out eventually.
Love it. Love to hear that.
Yeah.
Tesla's all over Vancouver. Yes. I see the same thing. Like everywhere I drive around the Northeast here, I put $10 in for every Tesla I see on the road, which sometimes gets to be a lot of dollars. Yeah, there's just more and more. And they stand out the most. You know, I'm seeing more Teslas than anything else. Yeah.
Yeah. Oh, and it's great to see. Yes, Brooke, I do think honestly this is something that may happen, and we were talking about it earlier in the show. I have a feeling because Andre wants to do something when it comes to education. If Elon does actually create a college, like he joked about in the past, if that does come to fruition, it could be something where Andre jumps in and maybe he is in charge of training. And I have no doubt because they did part ways on good terms. So I think that Andre will play a role with Tesla of some sort in the future, very similar to JB, because I know full well that Tesla is going to be partnering heavily with Redwood Materials. And I wish, my gosh, if I can invest in Redwood, I would jump on that as well, because they're going to play a major role when it comes to battery production in the future and battery recycling.
Yeah, I definitely wouldn't rule out Andre starting his own business or something along those lines.
Oh, yeah. Yes, actually, this was exactly what Elon said. Elon said that 2023, the Model Y will be the best-selling car in the world. They are on pace for that. They are on track to hit that for next year without question. Whether they get it this year or not, I don't know. I think that's all going to depend on how well the Corolla sales do. If Toyota is able to pump out enough of them, then I don't know if they're going to overtake it. That's strictly going to come down to whoever can produce the most, in my opinion. But I have no doubt in 2023, Model Y is going to become the best-selling car in the world, and I'm going to have one of them. Let's see what else we got here. Yeah. Oh, yep. There it is. Yes, 1 year before his prediction. So that'd be awesome to see. It'll be interesting to see if that actually does happen this year. And great name, Tim. I like that. Let's see. Did we miss anything else up here? We've hit an hour, so it's about time to call it a night. I just want to make sure I didn't miss anything from anybody. Yeah, that looks like that's about it. And I apologize if I did miss anything that's in there. But that's what we got. We've hit the hour mark. It is time for us to take off. Thank you all so much for watching. Thank you, Vin, for joining us tonight. So this is awesome. Very, very much looking forward to earnings next week. And we will all be sharing that. I don't know if I might actually do a live stream for it. I'm not sure. I will let you guys know on that one. But otherwise, thank you guys all. Have yourselves an awesome weekend. Thank Vin. If you guys don't follow him, check Vin over on his channel at the at Investment Club. I'm putting out some good stuff over there.
Thank you, Tim. And
Vin just got himself to his monetization goals. So awesome. Congrats on that, Vin.
Thank you so much. Yeah. And thanks for having me on. And I think we'll definitely have a lot to talk about post earnings as well.
Yes, absolutely. Thanks, everyone. Have a good one.
Bye, everyone.